Welcome back to the Crypto Hangout. It's Crypto Crane. Today is August 4th, 2021. I just wanted to bring you guys some snippets from the Aspen Security Forum where Gary Gensler of the SEC was being asked some questions, and he was speaking to a couple of reporters as well as Brad Garlinghouse. So I just wanted to bring you guys some of this so you can actually see. It'll be a little bit lengthy. But I promise you it'll be some jewels and some knowledge in here, and you can get an aspect of what he's saying and what he's thinking about.
Currency. Another one called The Truth Machine, and also Guts. He's been featured in documentaries, and I couldn't think of a better person. So thank you very much, and I'll let the two of you take it away. Thanks.
Thank you so much for that kind introduction, Anya. I look forward to the discussion with Paul, and thank you, Nick, and others who invited me here to speak at the Aspen Security Forum. Now, as is customary, I should note that these views are my own, and I'm not speaking on behalf of the Commission or the SEC staff. All right, I got that out of the way. So some might wonder, what does the SEC have to do with crypto? And further, why, as Anya just pointed out, did an organization like the Aspen Security Forum ask me to speak at all about crypto's intersection with national security? Let me start at the beginning. Many of you might know it who are listening, but it was Halloween night in 2008, in the middle of the financial crisis, when Satoshi Nakamoto published an 8-page paper on a cypherpunk mailing list. I don't mispronounce it, cypherpunk mailing list that had been around and run by cryptographers since 1992. A little off the grid, a little libertarian, cypherpunk mailing list. Now, Nakamoto, we still don't know who she, he, or they were. If at the end of this talk, Paul wants to tell us, I'm looking forward to knowing who Paul thinks Nakamoto was, wrote, I've been working on a new electronic cash system that's fully peer-to-peer with no trusted third party. You see, at the core, Nakamoto was talking about some form of private money that didn't have central intermediaries. But Nakamoto had solved two riddles that had dogged these cryptographers and other technology experts for a couple of decades, since the dawn of the internet. First was how to move something of value on the internet without a central intermediary. And that's where it can fit into national security, how to move something of value on the internet without a central intermediary. And relatedly, how to prevent what's called double spending of that valuable digital token. So subsequently, her innovation or his innovation spurred the development of crypto assets and what's called the underlying blockchain technology. About a dozen years later, where are we? Well, the crypto asset class has ballooned. As of yesterday, about $1.6 trillion of value. Of course, it goes up, it goes down. Over 75 tokens worth at least $1 billion each, 1,600 worth at least $1 million of market capitalization. And while that 1.6 trillion is relatively small compared to the US capital markets of nearly $100 trillion, it's still significant. And of course, it's larger than the capital markets of many jurisdictions that this security forum would discuss. And before starting at the SEC, I was honored, as Anya said, teaching about the intersection of finance and technology at MIT. This included courses in these various topics. And in that work, I came to believe that though there was a lot of hype masquerading as reality in the crypto field, Nakamoto's innovation is real. And some in the public sector would say, well, no, almost like wishing it away. I really do think there's something real about the distributed ledger technology, moving value on the internet without a central intermediary. Further, it has been and could continue to be a catalyst for change in the fields of finance and money. At its core, Nakamoto was trying to create private form of money with no central intermediary. We've had a long history since antiquity of private monies competing with public money. So this is not necessarily new, but it was new how it was done and how it can live in a digital age. Now, let me say, we already live in an age of digital public monies. The dollar, euro, sterling, yen, and yes, yuan, all are digital. And if you had any doubt about that, It's obvious during the pandemic. I mean, who is actually using paper or coinage money in these days? So such public fiat monies fulfill the three function of monies. Monetary economists have studied this for a long time. Store of value, unit of account, medium of exchange. Why do I raise that? Because my opinion is no single crypto asset, though, broadly fulfills all of the functions of money. Bitcoin has some of it, but not broadly fulfilling all three. Primarily, crypto assets provide a digital, scarce vehicle for speculative investment. Thus, in a sense, one can say they are highly speculative stores of value. Buy Bitcoin, it goes up. Maybe I have something better for my future and my retirement, but it's not really being used as a unit of account. And we also haven't seen that crypto has been used much as a medium of exchange, except for one large exception. To the extent that it is being used as a medium of exchange, it's usually often to skirt our laws with respect to anti-money laundering, sanctions, tax collection on the dark web, and yes, also it's enabled extortion via ransomware, as we had seen recently in Colonial Pipeline and elsewhere. You see, with the advent of the internet 40 years ago and the movement from physical paper money to digital money, we nations states around the globe layered various public policy goals over our digital public money system. Sanctions regimes, anti-money laundering, tax compliance. We did that sort of in this digital public money area. And that's what, to some extent, people are using a medium of exchange in crypto. Now, as a policy matter, I'm technology neutral. I would say as a personal matter, I wouldn't have gone to MIT if I weren't interested in how technology can expand access to finance and contribute to economic growth. And I wouldn't have spent so much time around the digital currency initiative at MIT and my colleagues there if I didn't think there was something here that could be a catalyst for real change. But I am anything but public policy neutral. In my current role, as new technologies come along, we need to be sure that we're achieving our core public policy goals. And in finance, what's that about? Protecting investors and consumers, guarding against illicit activity, and ensuring financial stability. And that's where it fits into national security interests. But how does the SEC fit into it? And I'll close with some thoughts on the national security. But the SEC, well, we have a three-part mission for those who aren't familiar: protecting investors, facilitating capital formation, and then in between, maintaining fair, orderly, and efficient markets. Investors, capital formation, and then the markets in between. We focus on financial stability as well as part of that fair, orderly, and efficient markets, but at our core, it's about investor protection. And if you want to invest in a digital, scarce, speculative store of value, that's fine. Good faith actors, by the way, since antiquity have been speculating on the value of gold and silver. So that's been around for thousands of years. Right now, though, in this digital, scarce, speculative asset, Bitcoin and others, we just don't have enough investor protection. And frankly, at this time, it's more like the Wild West than some sort of protection against fraud and manipulation in the space. This asset class is rife with fraud, scams, and abuses in certain applications. There's a great deal of hype and spin about how crypto assets work, and in many cases, investors aren't able to get rigorous, balanced, complete information. It doesn't mean there aren't good faith actors, and there are many of them, but investors really aren't getting the information to judge the risk and understand the risk. And I fear that if we don't address the issues, I worry a lot of people will be hurt. Now, first, about the tokens themselves. Those tokens being offered, many of them are offered and sold as security. There's actually a lot of clarity on this front. So you see, in the 1930s, Congress established the definition of a security, but they included like 20 different items. You'll be familiar with some of them: stock, bonds, notes. But one of the items is called an investment contract. In the following decade, the Supreme Court took up what's the definition of this term: black letter law, investment contract. This case said an investment contract exists, and I'm going to quote for a moment: a person invests his money in a common enterprise and is led to expect profits solely from the efforts of the promoter of a third party. You might have heard of it. It's called the Howey test, related to an estate of William Howey that actually was about orange groves in Florida. And what do orange groves in Florida have to do with cryptocurrency? Well, the Supreme Court has upheld this test a number of times subsequently. And so further, there are other tests. There are many other determinations what comes under the federal securities law. Now, my predecessor, SEC Chairman Jay Clayton, I think, said it well in 2018 in congressional testimony. He said, to the extent that digital assets like, and I think he named Bitcoin, but he said, to the extent that digital assets like initial coin offerings or ICOs or securities, and then he goes, and I believe every ICO I have seen is a security, we have jurisdiction.
All right, here, as you can see here, Gary Gensler is showing, giving you his perspective about why the regulation is needed as far as his background. A lot of people say that he would be crypto friendly, but well, doesn't sound too likely right here. Want to go to some more of what he has to say.
Facilitate those seeking to sidestep a host of public policy goals. Sidestepping our traditional banking system, because you don't have to give them any bank account information. You're just going stable coin versus Bitcoin or another crypto. Potentially sidestepping any money laundering, tax compliance, sanctions, which ought to be of interest to this audience, and the like. So this all affects national security. Stable coins, well before any Facebook DM, are right now in the center of this marketplace. Further, these stable coins may be securities and investment companies. To the extent they are, we at the SEC will apply full investor protection under what's called the Investment Company Act and other laws on these products. And I look forward to my colleagues on the President's Working Group led by Secretary Yellen. We're doing a project, a report in this area. Next, I just want to mention something about investment vehicles. Investors may want exposure to this asset class, but not do it directly. Do it through some collective investment vehicle. We do it in the equity market, we do it in the bond markets, people might want it here. Well, there are some vehicles that already exist. There's one that's been around for about 8 years that's over $20 billion in size. Also, there's a number of mutual funds that are investing in what's called Bitcoin futures on the Chicago Mercantile Exchange, and that's overseeing the Bitcoin futures by our sibling agency, the Commodity Futures Trading Commission.
Now here he's saying that, you know, the investment vehicles that they, there are some already established, but pretty much they don't want you to be your own bank. They want you to use traditional investment vehicles to invest in crypto that they can regulate and control, manipulate, etc. And then last little statement from the interview.
Turn it over to Q&A.
I got
So I
right
think I
here.
have basically one more question. I wanted to ask you, in your May congressional testimony,
Now this guy asked a good question. He asked him about his testimony and about that he gave to Congress and about staffing, et cetera, in the direction of regulation. Just listen to Gensler's response on this.
pointed out that, and you said it today too, that you could use more staff. And you have pressed Congress.
It's a bit of an understatement. Let me say, there's 1,500 tokens that purport to be over $1 million of value. There's dozens of platforms that say, come here, we'll lend us your crypto. I mean, you could go on site right now and find some that are touting 4% returns, 7% returns, 9% returns. I am not touting any of them. For those listening and investing public, but who's looking after the investors as to those? Are they good faith actors that are really there, or are they Ponzi schemes, or are they somewhere in the middle? And so, yes, we could definitely use more staff in this area.
Yeah.
All right, as you can see, Gensler Gensler is asking, is it Ponzi schemes or what? As far as these platforms that are offering enormous gains, yield farming, and lending out your crypto, etc. So I mean, we'll see. We'll see how the regulation goes. We'll see how hard they come down. We'll see if it actually stalls the market. Um, if it actually kills it off for a while, or if the market suffers through what seems to be tough, stringent regulations that SEC is looking to put down, especially on Ripple and XRP, as well as providing clarity for other cryptocurrencies and blockchain technologies. So let's see what Brad Garlinghouse had to say and Ripple had to say. This is on day 2. The other one was day 1 of the Aspen Security Conference. Let's see what Mr. Garlinghouse had to say in response to Mr. Gensler's interview on day 1 at the Aspen Conference.
So, Brad, can you give us a quick update?
Sure. Thanks, Paul. Nice to you. And thank you to the broader team for including me. I'm looking forward to this as well. Team Ripple, we've, despite the pandemic and frankly, despite the lawsuit from the SEC, 2021 has been a record year for us. Things continue to grow. For those of you who aren't familiar with Ripple, at the core, we are a technology company selling solutions for cross-border payment, cross-border settlement. In our technology stack, we use a digital asset called XRP. XRP is one of the leading cryptocurrencies out there. And as Paul introduced, the SEC filed suit last December asserting that XRP is a security. The one thing I will say, I don't have too much to say about the case itself. I think yesterday we heard Chair Gensler comment that they brought 75 cases, enforcement actions against various digital assets. If you break that down, 37 of those didn't involve the sale of any digital asset at all. 37 were what we'd call ICOs, initial coin offerings, and oftentimes these were actual frauds. Only one of the 75 involves a digital asset outside of an ICO. And for obvious reasons, I'm not going to talk too much more about that case, despite other than saying it's definitely an outlier. And I'm sure we'll talk more about some of Gensler's comments during the conversation. So thank you.
All right, as you heard, Brad Garlinghouse, and shout out to XRP Bags for that snippet there. So yeah, tell me what you think. What you think about the what Mr. Gensler had to say and what Brad Garlinghouse had to say. You think is the Howey test outdated? Is it perfect for cryptocurrencies? If you like the content that I'm providing, the news that I'm bringing to you guys, take a second to like and subscribe to the channel and like the video. And we'll continue bringing you more content. All right. This will conclude August 4th news. Peace.